Good morning, traders. It is Sunday, January 21st, and Friday, the market closed at an all time high. Not just above the high from 2023, an all time high. We've been expecting that. I'm going to start my video with a review of my previous picks. That's how I start all of the videos. That allows you to go back and get a feel for how accurate this system is and how well this approach works. AMD, that was a stock that I highlighted during last Wednesday's live event. By the way, please make sure you check that little live button on my YouTube channel for upcoming live events. We plan on doing one this Wednesday. Harry and I, we both like T-Mobile, TMUS, so we'll take a look at that stock as well. AMD was the stock that I picked because I didn't want to have the same stock as him. Here's what I liked. I liked the fact that the stock broke out through horizontal resistance and it closed on its high on very heavy volume. Then we saw the stock pull back, test the halfway point of this long green candle, and rally and close right on its high of the day. Well, this was actually when the Wednesday live event was taking place. So let's go into a 15-minute chart and let's observe the price action. So this is when the event was being recorded in the middle of the trading day. You can see how the stock did finish a little bit higher. Some volatility on Thursday, but look at that gap up. So this gap up was not something that you needed to chase right away. See what the stock does. It pulled back most of the day, but it was still able to close higher than Wednesday's close. Everything is still in good shape. Friday, we get this little jump higher, and look what the stock did the entire day. Folks, this stock has rallied from about $160 to $174. Yeah, I would call that a pretty good trade. TMUS. That was the stock that we both liked, and I still like it. So this is where the Wednesday live event was taking place. You can see the stock pulled back on Thursday, but it was able to close near the high from Wednesday. Okay, everything looks pretty good. Stock continued to march higher. The difference between T-Mobile and AMD is obvious. One is almost a utility, a telecom company. The other is a high-tech company making AI chips. And that was the big news on Friday that really got the market cooking. But there was actually more to it than just that. You know, from my previous videos, the one that came out a week ago, I believe IBM was the stock that I featured in that video. Look at that baby go. Meta has also been one of the picks in the last week. To be quite frank with you, I can't even remember which stocks I highlighted. I just know that in the last week, these have been the names that I've been talking about. AMD, Meta, IBM, TMUS, they all look good. So what's got me so fired up? Well, you know, from watching my previous videos, I have been waiting for this market breakout. This strength that we saw from last November through year end, right in here, told me that we were going to move higher. So what happened? Well, the new year started and we started to see a little bit of profit taking. Okay, well, we should expect that after a monster move like that in 2 months. That was about a 10% move in the course of 2 months. So that is a huge move. Now we get this little dip. Oh, I don't know. Everything's looking pretty iffy in here. I'm not sure if we're going to get that lift off. This is when you started to hear people talk about this is a double top formation if we take into consideration the all-time high and the high from 2023. The market should retrace 7% approximately. All this kind of bullshit, okay? Headlines start coming out about the Houthis are attacking ships in the Red Sea and we're going to have more supply disruptions and that's going to be bad because we're going to have more inflation coming and The news in China is not good. Their market was down big. The property developers are a problem. Youth unemployment is a problem. Ooh, the Senate can't kick the can down the road. The budget deal, the budget deal. All of these dark headlines start taking control. So, for those of you who are long on a swing basis, you start reading these headlines and you start watching these positions move against you, and now all of a sudden you're scared. Gosh, I wonder if I missed something. I wonder if I got this one wrong because things just don't seem right now, and bonds are pulling back a little bit, and I just don't feel as good as I did before. Well, if you were a short term trader and you started doing weekly call debit spreads here, expecting the market to surge higher after a run like that, that's a bad move. I put a video out about a week before the end of the year, and I explained I am looking for exactly this move. I posted a chart, I did everything. I told you we're going to pull back a little bit. Be patient. We have to work off some of these gains because there are going to be profit takers. But what ultimately will happen, and we know this from the previous price action, not from the headlines, not from what the Fed is doing, not from inflation readings. We know this based on what the big money is doing. It's bared out in the price action. So these profit takers who come in here, we need to work off that supply, and eventually buyers are going to get more aggressive. So we had this little low off of the dip, and this was a big clue. And I mentioned this to you. Look at how all of the losses, all of the worry that started the year off were erased with one candle. So now the market tests the high from 2023 and it backs off, but it finds support at AVWAP-Q for the SPY. Okay, higher, low. This is why I told you last week the market is a pressure cooker. We are ready to blow the lid off of this thing. Folks, it doesn't get any better than this. So all of those worries, all of that hand wringing that went on in here, all of the second doubts were resolved in one little day. And I told you that this was going to happen at the end of 2024. And I wrote an article about this in Real Day Trading on Reddit. I said, everybody's going to look back at the end of 2024 and they're going to look at this price movement and they're going to see this tiny little blip on the radar when the market continues to march higher, and they're going to go, ha, so that was a bullish flag formation. How easy. Pete's not a genius. I'm not a genius, by the way. I'm just reading price action. I'm not reading headlines. I'm reading price action. Don't trade based on what you hear. Don't trade based on what you think. Trade based on what you see. Price is truth. So now we get this liftoff. I also mentioned to members last week that there was a reason why I believed that this timeline was going to start tightening. This is a noose around the neck of any possible shorts. They have no staying power. You did have some people here looking for that double top, lower high, and they were starting to short in here. Well, how much staying power do you think shorts are going to have? First of all, with the market near an all-time high, with earnings season coming up, mega cap tech earnings, those stocks have been driving the market higher. With the FOMC statement pending, and I'm not even talking about how the earnings reactions are going to come out. I'm not guessing how those stocks are going to react. I'm not guessing what the Fed reaction is going to be. But what I can tell you is that if institutions sense that there's a lot of pent up demand, which they know based on this price action, asset managers are looking to rotate into the market. We handle their order flow, we execute their trades, we know they want in. So they have that information working to their advantage. They also know that shorts don't have a lot of staying power because with a tiny little nudge higher, they can push this market to a new all-time high where shorts have absolutely no staying power at all. What idiot is going to be short the market at a new all-time high when you've got earnings announcements coming next week and an FOMC statement? Well, that statement could be bearish, it could be hawkish, and the market could erase all these gains. They're not around to find out. They're going to get squeezed this week. They have no staying power. So we stay long. This price action told us exactly what we needed to do. You need to be able to do this on your own. Do it yourselves. Know that when you take a stance on the market like this, they're going to make you feel like you're on the wrong side. And all of a sudden, all the headlines that come out are going to be just so bearish and just so negative. They're going to make you think that you are wrong. What you have to realize is that when you watch some of these major news outlets, doesn't matter, Fox Business News, CNBC, Bloomberg, whatever you're watching, these guys have their pom-poms out, okay? Whatever the market's doing, yeah, it sure looks bearish to me. Look at that thing sell off. I knew this was going to happen. And then the next day, the market rallies and they're like, yeah, this market looks really good. We've got a lot of analysts who say this market could go up to 5,000. And whatever way the wind blows, that's which way they blow. You can watch an entire day of those TV programs, and what you're going to walk away with is the market could go down, the market could stay flat, or the market could go higher. And they're going to have guests on the entire day to tell you why they think any of those events could play out. But you don't know how any of those analysts have done. What's their track record? Are they right? Have they been wrong most of the time? They're on the air and then they disappear. I don't want to be them. And I'm not them. I give you a pick every day, and then the next time I come on, I tell you exactly how that pick did. That's how we build trust. And that's how I'm going to build this YouTube channel, quite honestly. I'm looking to build it, so please, if you like what you've seen, tell other people about it. Let them know that there is a reliable source. They can come in, they can watch my videos, find the biggest drop that you've seen in the market over the course of the last 15 years. Find the biggest rally that you've seen out of that low. And then go watch those videos from exactly that time frame. See how we were positioned and if we got it right. That trust is a critical component because there's a lot of bullshit on the internet, quite honestly, and you don't have to go any further than the first 5 minutes of my videos because there's some advertiser out there telling you that they're going to sell you all of their secrets for $5,000. Turn that crap off. Skip those ads. They don't know what they're talking about. I'm not charging you a nickel. But what I have done is I have outlined a systematic trading approach that really works. And I've got a ton of members who've rolled up their sleeves. They put in the hard work. Every day in the chat room, I'm seeing them post incredible trades. They're turning the corner. So the proof is not Pete's a good trader. The proof is Pete's system works and other people are learning how to do this. So enough preaching. I told you the market was going to break out. Now we've got the breakout. Now what happens? Well, This is a compression right in here. You can see that since that October low, there have not been any dips, hardly even any red candles. When we do see a red candle, they're immediately reversed, immediately reversed, immediately reversed. That is a sign of heavy buying. This little dip, like I told you, 4 days of selling to start the year, engulfed in one candle. Tiny little compression here. This was not a big decline. This is tiny, brief, shallow. That's how we like these declines. In fact, this little bullish flag formation, we're likely to see 2 more of them before the momentum of this move higher starts to wane. How long will it take us to see those other bullish flags? When might I see them? I don't know. Probably over the course of the next month or two, probably by March, I would think that this move is starting to get a little bit exhausted. It depends on how earnings come out. If I take a look at earnings back here at the July, let's scroll back a little further because it was right here, at the July high, well, look, stocks have moved marginally higher than that point right there, but not a lot, just marginally. And in that time, what has happened? We've had a roaring economy. We've had inflation starting to come in. We've got a Fed that has stopped hiking interest rates and that might actually consider some rate cuts. And companies have had 6 more months of profitability. So that means that valuations on a relative basis here versus here are attractive because there have been 6 months worth of earnings. So, gee, I wonder if earnings season is going to be negative. Maybe this is a good time to sell. Why would you do that? You don't have any proof that the market is going to roll over or that those earnings are going to be bad. What you do have proof of, based on the price action, is that buyers feel the market is going higher. That's our job, is to follow the smart money. And if they decide at some point in time that the market is properly valued after a big rally like this, it's not likely that we're going to just crash and roll over. Only thing that would spark something like that is a credit crisis. It's not in the cards. I'm not seeing it at this point in time. Okay, that would be a big shot across the bow, and that would be concerning. What usually happens when the market makes a big run like this and the move gets exhausted is that you start to see tiny bodied candles and a compression and sideways movement. So those are the signs that we're going to be looking for. But until then, and like I said, we're probably going to see another 2 of these little dips, these little bullish flags form. And then by the end of the third one, that's when I would expect to see some price compression. Is that around SPY 500? Yeah, it could be. So let's see what earnings season provides us with. We've got lots of companies that are going to announce this week, but the news is still relatively mild compared to what we're going to get in 10 days. Because in 10 days, that's when we're going to get the mega cap tech stocks announcing. That's when the bulk of earnings will be released. We also have the FOMC statement. Could the FOMC statement splash some cold water on the market? Well, we've seen bonds pull back a little bit, so there's a good chance that bonds got ahead of themselves. But that doesn't mean that the Fed is all of a sudden going to reverse their policy of pausing. So here's a big rally in bonds. So we can see bonds higher, interest rates lower. Well, they got a little ahead of themselves maybe on the notion that the Fed could cut rates in Q1 sometime. I don't see that happening. I've never seen that happening. So why don't I feel that the Fed's going to lower interest rates? There's no reason for them to. Why would they lower interest rates? They've been saying for the last year and a half that they got inflation wrong. They are not going to make that mistake again. The most dramatic interest rate hikes that we've seen ever took place in the course of a little more than a year. They knew that they had to take drastic measures, but they were expecting the economy to soften. It hasn't softened. Yes, inflation has come down, but core inflation is stubborn. There is absolutely no reason for the Fed to start easing right now. So, yes, that FOMC statement, February 1st, I believe it is, yeah, that could be a splash of cold water. We could see that next dip. But that is going to be resolved with a bullish flag, I believe, because we've got everything right now working for the market. Economy's strong, job growth is excellent. Initial jobless claims came out last week at 187,000. That is a super, super strong number. So ignore all the headlines. This market's going higher. Should you back up the truck and load up your long positions? No. We're in control. We're long here, we're adding here, we're adding here. Great. Now we've got a nice position on. Let's just continue to ride this move higher. Be aware of earnings announcements that are coming out. Be aware of companies that are releasing earnings where there are tangent plays, meaning you are long a stock, you're vigilant, you're making sure that earnings aren't being announced, but there's a competitor who's announcing earnings. Those competitor earnings are going to impact your stock based on that reaction. Does that mean that you have to exit your position? No, it means that you need to be aware of it. You might want to reduce your position size. You may be very comfortable with the earnings reaction to the other company. So watch your earnings calendars, make sure you know who's going to be reporting. And this market, when you're riding this move higher, if you are a short-term trader, if you are a day trader, if you are trading overnight swing trades, very short term, yes, look for continuation this week. I believe the market's going to continue to power higher. This is a beautiful breakout, okay? Is it going to go gangbusters? Probably not. There's a lot of news that's pending. So be in a buy the dip mentality. Wait for those dips. Do not chase gaps higher. There's no reason to chase right now. Okay, this is not a runaway market where everyone feels like, oh my gosh, if I don't get long now, I'll never have another chance. I don't see that sentiment at all. So be very patient. Wait for those pullbacks. Stocks that we really like, wait to see how they react to a slightly bearish market move intraday. If the market pulls back a little bit from the opening price and the stock hugs the high of the day and it's above the prior day's high and the volume is good, there's a good chance that stock is going to continue to power higher. You just need to wait for that market support. And on a swing trading basis, if you're long on a swing basis, you've entered here, you've entered here, you've entered here, you've got a really nice average cost basis, and you've got lots of staying power in that trade. And so as the market continues to move higher, when it ultimately hits that peak, then maybe you take some chips off the table. You don't have to take everything off, but take some profits and look to re-enter on those dips. That's what your mentality should be. So I've given you the market picture. I know that we've been very heavy in tech stocks and semiconductors in particular, so I'm going to be looking for something that is not in the tech sector. That does not mean that I don't like the tech sector. I just feel that for those of you who are monitoring these stocks and looking for new opportunities, you're probably overloaded in that area. So let's find something else that looks good right now. One natural area for us to look at would be banks, and there still are quite a few bank announcements coming out this week. I feel that XLF, the financial ETF, has done what I expected it to. Now, if you recall, in my previous videos, I had mentioned to you that I felt the reaction to financial stocks was going to be relatively muted. This big move up right here could be justified because earnings were going to be good. And guidance was going to be good because we can expect interest rates to remain higher for longer. People have jobs. People can repay their loans. These are all good things for financials. So there's still a big compression in here. I would wait to see those earnings reactions this week, and we want to let this compression continue to play out. Then, if we get a breakout above this compression, then we can consider some financial stocks. The nice thing about trading financials right now is that the earnings news is behind us. So we don't have to be in and out of the positions trying to avoid earnings. So I'm not saying that you should buy financials now. I'm saying you should wait, watch, monitor. But this would be a nice compression breakout here. And we could see that there's a longer term alert line coming into play. So when that's breached, we're going to know anyway based on that breakout. So I go through my list of stocks here, and at the very top is SMCI. That was a really nice breakout, and they released early guidance, meaning the earnings announcements are still slated for later in January, I believe maybe January 29th or so, but they provided robust guidance, and this is a pretty major breakout. You can see the stock has been compressing, and then all of a sudden it releases through this horizontal resistance, massive volume on Friday. Look at that rally with the stock finishing near its high. Incredible. Will it go higher? Yeah, I would be a buyer of this stock for sure. I'd be waiting for any kind of dip. I'd love to see what it does on Monday, but this is a considerable breakout. You can see that the stock has rallied from $80 last year all the way up to $423. That alone is going to keep a lot of people out of the stock because it's run so high. I just can't buy it up here. I think the stock's going to pull back. These are exactly the kinds of stocks that you want to be buyers of. The stock has been able to preserve all of these gains. If this was all fluff, whack, all the way back down to $80. That's what would have happened. It did not happen. Institutions realized that they've got a really nice product cycle and they've got some great products coming out that are going to generate a lot of income. So they're in here buying on these dips, and eventually they exhaust the supply of stock and it lifts off and it breaks out through this compression. The longer and tighter the compression, the bigger and more sustained the breakout is. Do I like SMCI? It's a very choppy stock. It's one that you can consider day trading. We've got a lot of tech stocks that we've already highlighted. I would stick with AMD and Meta and IBM. Those are awesome stocks. So yes, I'd be watching this for a day trading basis, but it makes big moves and it can be very choppy. You can see that in the price action. So I would look for a dip, and I would like to see a little bit of a pullback, and then when the stock gains its strength relative to the market, then I would be looking to enter that for day trading opportunities. Swing trading opportunities, the cat is out of the bag on that right now. So if you did get a pullback and you wanted to sell an out of the money bullish put spread keying off of this technical breakout, I believe that breakout's going to hold. But you can see with the stock at 423, for you to get any decent kind of credit at the 360 level, it's going to have to pull back to maybe 400, maybe even 390. Then you'll have a decent opportunity to sell a 360, 355 bullish put spread. Try and get at least a $1 credit for that. Try and stay within a month. So yeah, that would be a nice bullish put spread that you can sell. Take advantage of time premium decay. Take advantage of this big breakout. And then let it kind of test and chop around and see if there's some profit taking. Then when it finds support and it starts to grind higher, you'll know that this is a good play. Now, one thing that you can also use as a gauge is you'd like to see half of this long green candle preserved. So if the stock pulls back in the next few days, but that halfway point is preserved, it's likely to continue to move higher, tick, 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 higher lows. It'll rest at that high and then it'll break out. So you can watch for that pattern as well. As I go through this chart, I look at a lot of different companies that are coming up, and I've taken a look at when the earnings releases might be. Now, we've got a feature within Option Stalker Pro that allows us to do that, and we can look at which companies will be announcing after the next 3 weeks or so. And I like doing that because it gives me longer time to be in that trade. And especially for these videos that you're watching, I publish them a couple times a week. It's hard for me to take a position in a company when I know it's going to be announcing earnings in 3 or 4 days or even a week, because the stock gets much more volatile and you have to be much more nimble. So I'm looking out of tech, and I'd like the earnings to be a little bit farther out. So as I go down the list in green royal flush, this is all I've been using for my videos, by the way. It's such a fantastic search. There are many great searches. They all look for something different, but this one's just really easy for me to go to because it has a lot of the qualities that we're looking for. And if I go down to Home Depot, I can see that it's not a tech stock, and it's kind of the first stock in here that's not a tech stock. Costco is also in here. Very expensive stock though. It's like a $600 stock. HD is getting a little pricey too. What is it that I like about Home Depot? Well, the earnings are not for quite a while yet, so I like that. We can see that we had a bullish flag formation right here. And by the way, let me do a quick check right now because I'd like to nail down that earnings date if I can. Typically, we're going to be showing when that earnings announcement is on the chart, and the fact that we don't have that earnings date, February 13th is the expected release date. So we've got about 3 weeks to be able to stay in this position. So here's what I like. I love this strength off of this low. I like this horizontal breakout. You can see how the stock powered through it, and it came back and it checked that breakout right around that 336 level. Then we had a bullish flag formation and the stock powered higher. Now it compressed and it was able to hold all of these gains. We have a new horizontal breakout level right here. You can see it visually. I'll put up the crosshair tool right in there. Comes into play around that 355 level. I like it. I like the fact that the stock moved higher and made a new relative high on Friday. Let's take a look at the price action on Friday, and we can see the stock powered higher, closing near its high of the day. Decent volume coming in later in the day. Okay, these are all really good characteristics. I like the stock. I think the stock is going to continue to move higher. I like this little breakout right in here. So if I were going to be looking for a bullish put spread that I could sell, keying off of that 355 level, it's a little close. I don't have any other support to key off of, so I probably would not be selling an out of the money bullish put spread on it. I probably would just be buying the stock and day trading it. I have less leverage because I'm going to take a smaller position if I'm actually buying the stock than if I'm selling an out of the money bullish put spread. But we can take a look at that bullish put spread too. So if we go into, let's say, a February expiration, we've got to be aware of that Feb 13th earnings announcement. So Feb 9 is about as far out in time as we'll be able to go. I'd like to get down to that 355 strike price. You look at the 355, 350, it's 83 cents bid, offered at 139. Can we get $1 for that? Yes, that's what we would need, and we'd be going out to February 9th. So we'd have about 3 weeks before option expiration. So yeah, I like this. I like the fact that it was able to hold all of these gains when the market was kind of waffling around in here. I like that we had a series of higher lows. I like the fact that it broke out. I'd be pretty comfortable selling an HD 355, 350 bullish put spread for a $1 credit on the notion that the stock is going to preserve its relative strength, on the notion that the market has just made a gorgeous breakout to a new all-time high, on the notion that the earnings reactions over the course of the next week are going to be bullish, and we're going to see a continued move higher, and that this stock will also continue to move higher. So a couple of courses of action you can take. One is you can sell an out of the money bullish put spread on it. That put spread is about $7 out of the money. So not a lot of breathing room, but I think you're going to see continued movement higher in the stock, which is going to allow you to take profits on this trade if you'd like to before the FOMC statement. And that move higher is also going to give you additional breathing room from that 355 strike price. Alternative, trade Home Depot, day trade the stock, take shorter term positions, watch for that relative strength to continue, and then you can exit the position before the FOMC statement in 10 days. Take a breather, see how the reaction comes out, and know that Home Depot will probably still be a decent stock with some upward potential into that earnings number. That's how I would play it. Retail in general, you have to be very selective. So I feel that some retailers are performing extremely well, like AEO. Some retailers like Macy, I think, are in trouble. I look at the chart. So you really have to know within that retail sector which companies are performing and which ones are not. That's all I've got for you today. Please make sure to watch that live event that we have on Wednesday. We go through lots of stocks, and those live events are packed with lessons. And we're taking your questions that you post on YouTube, and we're reviewing those questions, and then we're answering them. So a lot of the questions that you post, other traders might have as well. So it's a really good way to get lots of information. You can also go back and view some of our previous live events. Thanks so much for watching, everyone. Good luck with your trading. Look for the market to continue to power higher this week. That's all I've got for you. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.